sure what's going on. Oh, I know what it is. Ta-da. Hello. Can you hear me? Welcome to I Love Stocks. Hello, Amanda. We're going to talk about parabolic moves and how I messed up last week on FUBO, and what to look for and how to react to them, and how your emotions can get caught up in a stock that runs. So I'm Washboard Jim. Nice to meet everybody. We're going to wait a few more minutes. We're going to get the show on the road. I'm going to go get my coffee started, and I'll be right back. Let's see if this one here sounds good. Give me just a few minutes. Boom, boom, boom. Everybody have a stock to pick. After I get done talking about my failure last week in FUBO and how to kind of look for supports and resistance levels on these parabolic runs and why they run sometimes and how they run. Kind of an eye-opener when you think you're a good trader and all of a sudden you get caught up in the myth. And I think we all do that. We get caught up in excitement. Someone else's call, someone else's reactions. Go get my coffee here, and I'll be right back. Okay. Yeah. Welcome to I Love Stocks. Glad we can make it. We'll see what kind of show up we have today, but I'm going to get right into it. This will be recorded. So today's lesson is going to be about parabolic runs. What is a parabolic run? It's when a stock, let me see if I got an example here. I'm trying to find my 50. We're going to talk about FUBO right off the bat. Kind of excited for some reason I am. We'll bring this up to 20 day. I'm going to clean this up. There's a couple times we could have got caught up in this one here. Okay. Let's see what's going on so I can look at the messages. Welcome to I Love Stocks. I'm Washboard Jim. I've been trading for 16 years. Even with that much experience, sometimes we get caught up in the hype. And there's many reasons why a stock will run and break out periodically. I mean, for one thing, it's an acceleration in volume. As you can see on this big chart, we got the low acceleration in volume. It could be a low float stock. It could be a stock that popped up on news. It's a stock that runs from the bottom and just all of a sudden just has a huge breakout. It gets a lot of attention, a lot of social media activity. So it's called, parabolic. And a lot of times I can catch them pretty good because I know how to find the pullbacks and the support levels. And that's what we're going to try to do today on about 5 or 6 stocks that I've got jotted down here. And we get caught up in it sometimes. Sometimes we regret not jumping in them. As you know, FUBO was one last week that really jumped up, and it had a real big run before and pulled all the way back. Well, there's different kind of reasons that these stocks will run. Mostly it's a volume increase, price action, where the volume jumps up over the price, and then you have, like on a low float stock, you have float rotation, which could cause a stock to run up big time. Then the time when you start to really want to jump in the trade, it's starting to pull back on you already. As you can see right here, as the final biggest volume bar on this one right here, it just kept going. More people started getting involved in it, acceleration in volume, and then all of a sudden it started pulling back. And that's what you get. A lot of times these were traced back up to a previous high, which you had right in here. And that's how a lot of times how I try to find support levels. And you got to chart them out in different time frames when you're looking for these little support levels when you want to get into a trade. Now, a lot of times they'll run up on news. They'll get a really exciting news, and if it's a low float stock, a lot of people are watching the trade, and I call them scalpers. They'll get in and out of the trade as fast as they can. And a lot of times you have a periodic curve. A curve, let me see if I have a diagram of this. No, but I'll look it up. Well, let me see here. This is kind of more or less like a curve is. When it starts to get up momentum, and then it finds a little resistance level and kind of curves up on you. Then you have another breakout. You could re-enter the trade. You follow it off of moving averages. A lot of times I'll use the 50-day and I'll use the 200-day SMA, especially when I'm looking for pullbacks on a big breakout stock like this. that 50-day, sometimes they'll pull right back to that 50-day or even that 200. And that's usually on a yearly, daily chart. So if you got a pencil and paper, it's good to jot this stuff down. And also you can look it up by Googling it. Let's say if you wanted to do more study on how they run, and you just kind of got to type in PARA go to images, and you can come in here and you can find a lot of different ways that these things run and break out, and they pull back and then they have their other runs. This is called a curve right here, for example on Tesla. You just kind of follow the trend, and a lot of times they're on a moving average. So if you're following like the 50-day, it can follow all the way up. And that's, that's for a long swing trade. If you're wanting to go long, usually you do that in a year's time frame or a 20-day time frame. Now I have a 5-day rule. It's called the STEP program. Let me see if I can pull this one up. Well, let me see here. You can tell I'm kind of unorganized today. This is what I call my 5-day rule. It's called stair stepping. It's called the curve. When it curves up and you're stair stepping, you'll have the nice little breakout first day. Second day you'll have the same thing, third, fourth, and fifth. Now a lot of times I have a 5-day rule and a 3-day rule. Usually I'll get out of a trade on a real good 5-day run. I'll just go ahead and take my profit. And a lot of times even on a 3-day run, I'll go ahead and take my profit. It's hard for me to swing any stock longer than 3 days because I want to take that profit, because you never know what's going to happen the next day, if they're going to throw in an offering, because a lot of times it's up on news, and we've seen it many times when a stock runs up on news, that evening or that next day they have an offering. And I think, maybe CCIV might be a good example, because it's had a real nice run. Now let's look at this chart on CCIV. What do I do with that thing again? And then I want to talk about my bad trade of last week. See, this has had the 5-day rule effect go into effect, and this is running up on momentum. And everybody knows that we've been trading this stock in the room. I got out of it with a little bit of profit and took a small loss on this trade. Well, I got out with a pretty good profit. I jumped in it at $14.50 and run it up and sold it at $20 right up in here, right around $19.50 on this day right here. I got out of it right at open. And then I got back in it the next day. That same day as it pulled back. And when it ran up and it pulled back again, I got a little nervous. So when it got back up here, I went ahead and took my profit. But now watch. I've got this 50-day SMA. Now this is my 5-day rule, where I start to kind of get, a little nervous, a little itchy, thinking that it should pull back to a previous high. But here's a good example of what you call golden cross, when the 50 rises above that 200, and then we finally pulled back to that 50. So that's when I started getting a little bit nervous, but I should have thought that we're still going to hold support level as long as we're on that 50-yard line. This is the 50 SMA, and it's different in different time frames. It reacts different. So this is the 20-day 1 hour. I use 3 different time frames when I'm looking at a stock, especially one that runs up like this. I'll use the yearly, daily. And this one ain't been around that long. It's really had a nice little breakout all the way down here from 10. So that's up 100% in 5 days. But there's a lot of hype, and people will get stuck in the hype because everybody's talking about this. Everybody's doing videos on it. Every room's talking about it. There's a lot of attention on this stock. So we kind of closed with a bearish candle here on Friday. As you can see, that bearish candle. But every one of these was kind of bullish, because that body of each candle was above it. But here we kind of broke out in between. So this could probably pull back maybe to this lower candle base right here at 16 something. There's a lot of times I'll show you this other chart that I use. It's called the this here's called the Fibonacci automatic Fibonacci. Let me go ahead and put this stock in here, CCIV. You can see on the volume, when we had this nice little breakout here, you could tell that the volume was starting to go down, pull back a little bit. So that was the time maybe to exit the trade and maybe get back into that support level. But that volume is always means something. Like as I showed you in that diagram earlier, say you got in the trade, you know, down here at the very bottom, you started getting, you heard the news on it, they started comparing it with Tesla, saying this is going to be the next Tesla out there. Well, there's a lot of factors also involved in this that would make me a little bearish on the stock. For one, it's not Tesla. For two, they're not producing that many cars. They have like 1,400 employees, and you know, each employee costs them about $200,000 a year after it's all said and done, including insurance and all this other stuff. So they're not making money. But we still, the action and the hype is what got this stock going. Now everybody's looking at this trade, so I'm seeing that maybe it's going to pull back. That's what I'm thinking. So let's go ahead and go to the yearly chart, which I already showed you. We had that nice little breakout. These are day candles. Then I take it to the 20-day, and I look at the 20-day. And we're still looking good. These are my different moving averages, and I want to get that 50 up here again. There we are. This is the one I want to use. So we're just kind of following that 50. And let's go ahead and pull this down to the 20-day now, 20-day 1 hour. And that's where it kind of pulled back. So if you're ever in a trade like this and you're looking for supports, always draw that 50 SMA on there and use that as a support level. And for the ones that just got into the room, we're talking about parabolic runs. Okay? And that's a stock that is overextended, and we're going to talk about when do you recognize an overextended stock. And many times you can go back and look at previous resistance levels. But for now, we're just going to kind of use this 50 SMA as a guideline all the way up. And as long as it's above that 50, we're still bullish on the trade. And I got in this thing at 14.50 and run it all the way up to 20. And the first thing, man, when that spike came in, I got out of the stock because that's a 100% gain. And then we had to pull back. And we created what you would call, some people would say this is a bearish flag right in here. Some people would call this a bearish flag, because it's just going down and it didn't do nothing. But I jumped into the trade and held it for the next day, and then I got a little nervous, and I was caught up in the hype, so I wasn't thinking straight. Now, everybody knows what happened to this stock Friday. It was beautiful, and if I would have held the trade and stayed in the two calls that I had, which was the August something strike and then we had the 22nd for this month, I would have had a heck of a payload right there. Instead, I chickened out when it got right up in here, and it wasn't even 10 minutes later, that thing just shot up like a rocket. And then, as you can tell, it sold off again. But it bounced, and I called it in the room, and I set alerts for this $17 area. I don't know, if we go look at the 20-day, I'll probably tell you why I set it there. So let's look at this. Well, there was a reason. Oh, it was because of this pullback right in here. So I set that alert both times right in here, and it hit it both times, and I could have had a chance to jump in this trade 3 times that day, and I screwed up. That's because I was looking at other stocks that I was playing in. But I should have kept my eye on CCIV, because I know that everybody on earth is looking at this trade. So we just got to be careful when these things run up real big. A lot of times we get caught up in the hype, and my emotions were not in sync that morning, because I just opened up a new account for one, so I was trying to get used to how to use it. And then I just got caught up in the hype on this one here, and it went ahead and ran up. Now I'm still bullish on the trade, but for now it's only a momentum trade for me. And we're going to play it. If it pulls back to like this 200 or this 50 again, I might jump into stock. But after a while, it starts to wear off. So this is my 5-day rule effect. After 5 days, and a lot of people, Mr. Wall Street, he'll talk about the 7-day rule, and I like to beat him to the punch. I like to get out why the momentum is good and why the strength is still wild. Now, after the 7th day, this stock might really start to pull back pretty bad, or some news will come out with an offering. So you got to keep in mind the fundamentals of the trade too, and what's happening. That's called being in the now and knowing the news. It's the same thing that happened with FUBO. Now, we traded FUBO on that big run, and then I kept the hype going. I got hyped up about it, and I went ahead and tried to play that pullback that next day. Now, see what happens is a lot of times when you're looking at these stocks, I want you to pull up the year chart, and I want you to see the history of every time it breaks out. What happens, And then this one started taking market share away from Netflix and from Disney, and this stock started doing its thing. So a lot of times when these break out like this, they're taking market share from another trade, and that was exactly what happened with Netflix. It pulled back, same as Disney, and anything else that Roku. So FUBO is going to be like the next Roku, is what they say. Well, history repeats itself every time when you're in a trade. We had this huge run, and everybody in the room was just talking about it. We were all excited. And then we just kind of, I forgot about it. I just said, okay, it's had its 5-day run. 1, 2, 3, 4, 5. Keep that in mind in 5 days. And even on the 3rd day, take profit. And if it pulls back to your support level and holds up pretty well, get back in the trade. But always remember that 5-day rule. And so they pulled back, and then, it bounced off this 50. This is on the yearly chart. So this would have been a good entry. And one of the gentlemen in the room got in this trade before everybody else did. And he alerted the room. And it was probably one of his best days ever, he said. I mean, it just started taking off again, and then it ran up $12. So I got in the hype. I got caught up in the hype of this thing. I was all excited about it because I took the trade too, but I didn't do as well as as others did, and I got out of that trade that night, right before close, and look. The thing just kept running. So I was excited about this trade the next morning. And I'm telling myself, I'm going to get in this trade again. So I jumped in it, and it ran up a little bit. And then all of a sudden, it just started pulling back. And it just, same thing. I got teased a little bit the next morning. And then it pulled back. And then it ran back up. So I'm still excited about the trade, and I'm still in the trade. And finally, on that last pullback, I said, I'm going to get out because I just don't feel comfortable with it because it has a descending pattern. So the next day, it had the little pop again, back up to resistance level, and it pulled back. Now, maybe after about another day or two, and every week's a new week, I've noticed people have very short attention spans when they're trading stocks. I just got caught up in the hype, so I alerted it in the room, and then I ended up losing about $400 on this trade, and it was in my challenge count. And I'm going to pull this up. And I had this January 22nd strike. I cost average down in probably 95% of the trades I am in because I think that I know that I'm in a good trade and I know how to read charts. And sometimes you can get caught up in the hype. You get overconfident in your trade. So you got to write down these little rules in your mind. You got to always remember to be cautious in every trade that you're in. And I let that cautious leave me, and I knew the history of this stock, and I knew once it broke out real nice it would pull back, and I just didn't connect the two. I just didn't connect the dots. The thing pulled back, so I got in this thing thinking that it was going to jump up. I got in at 4:30 on the January 22nd strike, and that was, if I pull up the chart, And then I got in on the dip. I started seeing a reversal, so I added some more to it. I added another one, and 100, at 385. I got in way too soon, and then it dipped again, and I got in at 325, and then it dipped again. So I held it overnight. And I said, I'm not, by this time I was drained. My mind was drained. I wasn't happy. I had a lot of pressure on me because people followed me into the trade, and a lot of people got stuck in the trade. And I should have cleared my brainwave path there and said, hey, this ain't looking too good, but you can't follow the leader all the time. So you've got to do your own homework, and you got to do your own thinking. So I ended up taking a big loss on it. I finally got out at 242. Now look at it today. It closed it here at 69 cents. So it dropped down a lot more. Now, I'm not saying it's a bad trade, because I was really excited about the news. But sometimes the news can fool you. It's talking about going on online gambling, which is a big thing during this pandemic. Because I think that'll probably stay for now. Even when the pandemic's over, people are going to still stay home and gamble. And people are going to be working from home. And I know professional gamblers that like to gamble, so I got kind of caught up in that hype. I'm not saying it's a bad trade. I'm going to get back in it and make my money back. But I got to look for the right levels. And everybody was thinking, this was a good stock, and it just didn't work out for us. So the next time we get in the trade, we're going to try to make sure we find a right support level on it. And this was probably one of my stupidest trades that I've made. Well, I know it's the stupidest one I made in 2021. I made a couple last year that were pretty stupid, but I never suggest anybody to cost average down on a trade, because I know what I'm doing, kind of. If you know what you're doing and you think you know where them support levels are, I do it all the time, because I'd like to go ahead and cost average down and maybe get a cheaper. If it doesn't break out to the high, I can at least get out to that previous high. My camera here is kind of messed up. There we go. Make sure that's square. So we're going to try to look for a support level on this stock, and we're going to go back 20 days. And we got to recognize, now remember the rules, the 5-day rule, take that in consideration. 1, 2, 3, 4, and 5. They usually pull back. Or take the 3-day rule and just get out on the 3rd day, especially that 3rd day when it had that big spike. Now this happened about 20 days ago. So history always repeats itself. And I think the same thing's going to happen here. So what we're going to do is we're going to see if it wants to bounce off this 200. If not, and that's a pretty good little support level, as you can see right in here. So I'm going to draw me a little support line. And I'm going to draw a little resistance line. Now, this was a previous channel. So in my heart and in my mind, I think we're going to hold no lower than 30 bucks. I think that can hold, and then go ahead and start building back up and find resistance levels on the way up. But if it does pull back to this lower channel, then that lower strong buy is going to be right down here, right around the 25 area, 25.77, where we've had a triple bottom, and then we had the breakout. So always remember, don't get caught up in the hype on these stocks. And I'm going to show you a couple more. Dash. I called a put on Dash because I seen that this thing had just gone up too much, too fast. Here we go. 5-day rule. 1, 2, 3, 4, 5. Then she started pulling back. So when you're in these parabolic runs and you're swinging a trade, 5 days, 3 days at the most, and then you can get back in the trade on the pullback. Well, I recognize this pullback. I think it was this day right here when we had this big run right up in here, and I'm going to pull up the 5-day 1 minute. Yeah, it was right up in here. I called this put. I said it's going to pull back to this 200, and it eventually did. Now on the daily, if this was just a daily 1 minute, it's going to show a different time frame. So I'm saying after 5 days, you need to start, that warning light needs to tick in your head, or even after a couple of days. And if the momentum and the volume's still in the trade, you're okay with it. But here's a good example. When I started seeing the reversal here, the thing just pulled back beautifully. And it was a lot of these 3 candlesticks is what kind of tickled my fancy. When I saw these 3 right here, I said, this thing's going to pull back. We did have a double top, but eventually it did pull back pretty hard and hit this 200-day right here. And that was a pretty good little sell point. And I called it right there at 210 in the room. I said, we're going to pull back to this 200. Now, you remember that 200 moves around on you all day long, but this is on the daily 1 minute. So a lot of times when we have the big breakouts, the big spikes, let me see if I can find it. Daily 1 minute. And I'm going to show you what kind of patterns to look for too. Let's just say this is like a 1 day time frame. When you have these big spikes, a lot of times I'll pull back to that previous high right here. So you remember that, and that's about a 50% retracement. If you pull it up on that one chart, and that's where you can start thinking about getting back in the trade. Right about at that 50% retracement mark. Now this is on the 20-day. So this thing can pull back a little bit more, but as you know, and you all watch me when I'm charting, I'd probably draw me a little support line right in here. I'll show you. Right off this candle right here. And that would probably be because we consolidated there, and she kind of res up and held above that. So to me, that's going to be the low support on Dash. If that holds, you could probably run it up another $10. Now, I noticed this stock last week. It was really a sweet trade, and you could have been traded all week long. Let me pull up the 5-day. Because we had these nice little breakouts, and then it'd pull back. We'd have a nice little breakout, and then it'd pull back. We'd have a nice breakout, right at open, it'd pull back. Same thing happened here, but now you're seeing the weak hands. People are getting tired of it. The 5 days have already happened. So it's going to pull back more. But we want it to hold this bottom support right here at 182 and see if that holds. If not, it could pull back to this lower tier at 169. But this is what you call an overextended stock. Every big run, I mean, SPI is a good example. Remember what happened to SPI a while back? Let me show you what happened to SPI. It's another great example. Look at that. I mean, all the way down here from less than $2, it ran all the way up to $46. Why? Because it announced it was going to get into the EV car business. Now, you know, I've talked about this. This is my favorite sector of the year. EV and then weed, marijuana, cannabis, and then banks. But the EV is definitely on top of the list for probably another couple of years, because it reminds me of history books of the Roaring '20s. And another 10 to 15 years from now, I'd say more than half the cars on the street will be electric cars. And they're making them so sufficient. They'll be hydrogen cars. They'll just run on water. So a lot of new things are going to come out in the car industry in the next 10, 15 years. But look, you had the big run, and people getting out of the trade way too soon on this, and people were shorting this trade and got stuck in it. So history repeats itself. Here we had another big breakout. It pulls back. Another big breakout in 1 day. It pulled back. So this only happens, these runs like this, they're not something you want to hold. They're not something that you want to put that thinking cap on and that real red light that goes zzz, and say, I don't want to get stuck in this trade. So I just want to make that point very clear. They don't last forever. And I'm going to show you a couple examples of good flags to catch a good breakout. You know, I talk about the ascending triangle a lot. And here's the symmetrical flag. Sometimes they're a pennant flag. Symmetrical flag will run all the way to the top. A pennant flag will just kind of go up to here, pull back, and then start creating some resistance levels with higher lows. And then eventually you'll have your breakout. But they can always go the other way. My favorite flag of all, when I'm looking at these periodic runs, is this one right here. This is called an ascending triangle. It comes up from the bottom. And a lot of times when they do that, about the third time it touches the top, you're going to have a nice little breakout. This is what, when I yell out in the room or I yell out on social media, we're getting ready to squeeze, and I can call them within minutes before they start to break out. And usually you can tell by the tape. So that's another periodic run. And a lot of times when this happens, I'm going to get out of the trade that day. And then I'm going to get back in it when it pulls back to this horizontal line. You know, I get people, some people that I know jump on me because I like to scalp these trades. I like to day trade them. I don't want to get stuck in them like I did FUBO. You know, I just don't want to get stuck in them trades. And every time I try to do that, every time I try to go ahead and extend it on out for another day, I get screwed. And I'd rather take that profit and play that pullback and jump back in the trade, because I know where that support level is. It's going to be that horizontal line on that ascending triangle. They could be up in this trade and stuck in that trade, and then the next day it decides more, like FUBO did. Others will get out because they're up so much. I have the 3-day and the 5-day plan, and I'm not going to break that rule anymore. And I'm not going to break that rule of getting caught up in a trade, because I really punished myself last week. You know, I started in a challenge, and I was up 150% in my challenge, and I ended up losing $500 on the trade, $410. And I just didn't feel good about that. If I'd have sold it, I'd have been up another 50% in my challenge count. So it's just something to remember. Don't get caught up in the hype. Make sure the news is compatible for the run to continue. Make sure the fundamentals are behind the stock, that they do have money, that they are making money. That's a big thing, because you never know. Like Nile, you know, comes out with an offering, drops $20. Tesla's just a strong stock. It's my favorite one. And I'm going to show you how I scalped it Friday on a downtrend. And it was pretty testy with me, you know. If I'd have just bought the put, I probably could have just been fine and sold the put that evening. But instead, I played the bullish part of it. Well, here's another flag that's real good to talk about. This is called the symmetrical flag. That one we just talked about a little bit ago. You watch the curve and your moving average. You know, I use that 50, as I already showed you. This is like on a 5-day chart, and I'm watching that volume. And sometimes I'm using the 9 EMA when I want to follow a trade up, and then when it breaks that 9 and starts to fail, I'm going to go ahead and get out of it. But this is a symmetrical flag, and a lot of times you'll hear me call it a pennant flag, and many times when it starts to squeeze, you'll have that breakout. But always be watching that volume bar. You know, this is called, I can't remember the name of it right off the bat, but I think all in all, today's lesson is don't get caught up in the hype. Don't let your emotions control your trades. If you start getting too excited, you need to kind of ring that bell and slow down a little bit. So there's a couple more that I want to look at. I want to look at a couple penny stocks that have had pretty nice little runs. But SPI is one of them. I mean, this thing went from $2 all the way up to 46. So when you're seeing stocks like this, you're scalping it. You're not going to swing it overnight. You're scalping. You're in the day trading mode. You're going to get out of that stock when you start to see a reversal, maybe in the candlestick patterns or a descending pattern. And you've heard me talk about what a descending pattern is, and I'll show you exactly. And you know, the chart patterns can really lead your way into a bullish and bearish pattern here. You know, this is a bullish flag. You're breaking out. You had your run. Then they pull back a little bit. Then you have your other breakout, and that's when you want to go ahead and take your profit. Same as when you're at the top, like Fubo. It pulled back and it started rising up. Then all of a sudden, that should have been an indicator to me that this flag was bearish and it was going to go down more. So and you think in your mind, you think it's going to be bullish because it's going up and it's got higher lows and higher highs. Actually, what you got in here is people getting in the trade that are stuck up here, cost averaging down, and then selling at the high and taking the pullback. That happens many a times. And this is called FOMO. This is when people miss the trade, so they want to get into the trade and get in on the pullback and run it up. So, different flag patterns. And then I'm going to show you one more here. This is one that you got to be really careful of. This one here is called a descending pattern, a descending triangle. You had the nice breakout, but what you're having is you're having lower highs, and you're just kind of going down here to the side. You're holding support, but the sellers are getting out of the trade, is what you're seeing right here. And hope is holding up the trade because they think that they're going to get into the trade and it's going to run up, but no. In many cases, it'll pull back. And that's just something to remind yourself. I showed you my favorite flag patterns, and these are what you look for when you're in a parabolic run. So we'll go ahead and close it at that, and then we're going to go ahead and talk about stocks that you like to talk about. And I hope everybody got a little lesson out of this, and just don't get caught up in the hype, which I did last week, because I do like Fubo. I like it a lot. I still like it, but I don't like it like I do Tesla. Tesla's my number one trade because they're so advanced. This stock's running because of COVID. This is a tech stock. Fubo is. But our lifestyles are going to change here in the next couple of years. We're going to be staying at home a lot more and working from home. So stocks like Zoom had that huge run from 100 all the way to 500. Netflix, look where it was. We're calling it down under $200, and it run up over 500. Zoom's another good example of just. Let me just find this. And then we're going to go ahead and talk about stocks that you like or any questions. And pull up the 20-day chart. See, Zoom pulled all the way back to this 318. Well, I started to recognize, me and one of the ladies in the room started talking about Zoom, and she was right. She said the stock was going to pull back, and I kind of questioned her, and I said, nah, and it ran up that next day or two, but then eventually, a couple days later, the sucker just started pulling back. So she knew what she was talking about. And then we found a support level right down here around 335 where we had this triple bottom. And then she went ahead and went back up to that $400 level, which was a resistance right up here. So are we going to get caught up in the hype on this one too? Or is it going to pull back now and try to find a support level? I think it will. Because I'm not going to do that same mistake I did with Fubo last week. So I'm going to be looking for previous highs. This is going to be Zoom. We're going to put one right here at 378 and then pull it on back down here, maybe to a strong buy right around this, where we had this bottom here and this high right here. Right around 364.10. See that? So that's going to be a pretty solid support, and that's where I want to see it hold. I'm not going to short the stock because you don't know what trend it's going to take the next day. But I am going to take it, if it does to move back up, I might take it back up here to right around the 396 area. Or maybe right up in here to this other previous high at 392. But personally, I think we're going to pull back into this channel right here and create a sideways channel, and then maybe have another breakout or pull back more. So I'm willing to take this trade at 364 and run it up to 378. That's going to be my game plan on Zoom. And then let me see if I have any more in here. Y10. Oh yeah, there's one more thing I wanted to talk about. Let me find it here. You know, we talk about low float stocks in the room. We've got a scanner set up with low float stocks. Now we're always looking for stocks that are, when we're in a, I'd say a pumper stage, where all the social media is very active. You got different calibrated traders. Anything under 25 million on a float is, to me, a volatile stock. And it's going to have a lot of action. It's going to have a lot of price action up and down. So I'm always looking at these floats, you know, today's volume, and then I'm looking at the float over here. This one here had 417,000 shares floated. This one here had IPWR, and then you want to look for rotation. So you got DTSS. We had, what, 6 divided by 84 float rotation? I mean, back in the old days, I should be able to figure that out. So that's probably 12, maybe 13 times. We're going to pull this up on the chart and see what it says. DTSS. See if it had a big breakout. Here we go. We had that huge big run pre-market. It ran up a little bit into open. Then all of a sudden it pulled back more than 50% retracement. DTSS. Now see, history repeats itself. Every time it's had a huge breakout, it's pulled back strongly. Every time it had a huge breakout, it pulled back. Every time, every time, every time, every time. And then all of a sudden, they probably got an offering on this day. You know, I just go down here and I want to look at the news. I want to look at the previous news too and see what kind of, if it's China trade or, you know, why it's a 5G company. That's a good reason why this stock is running, because of 5G is the thing this year. 5G. But as you can see, it doesn't hold its gains pretty well. In fact, it pulled back to that 50% retracement. Let's look at it on the daily, 5-day here. I mean, it just didn't hold. Just didn't hold. So the next time this breaks out, you might be able to get into the move, but it's a day trade. Why? Because it's at low float. You know, it's got that low float on here. DPW is another one. You know, we like DPW. It's got a low float of 3.3 million, and I always like to compare this to FinViz because they're not always accurate. None of these are accurate. I'll compare it to FinViz, and if you don't know what FinViz is, and you're new to trading, type in FINVIZ, and you can put that ticker in here, DTSS, and it'll tell you exactly it's about a 6 million float. That's exactly about what Trade Ideas said. 5.2. I mean 3.7. So I'm going to go with FinViz over this. So we had, at least we floated one time. Now when you see something like DPW, 16 million. So let's type in DPW just to double check. The float on it's 16 million in here. It's a little bit different than Trade Ideas. So I'd rather use FinViz. Ameritrade sucks when it comes to finding out what the float is. So let's look at DPW. This is another one that jumps up on news, and it's a good company. It's a good company. We had this nice little breakout, and we got in down here at cheap. So that, can it pull back some more? Can it pull back to these other support levels? Yeah, it can. Maybe on the 5th day, or it gets some more news and it pops on up. But we had that great good news of the government contract, and then it pulled back pre-market, and then it had that pop, that double top with a lower high, and then she just went ahead, and we had another little pop after hours. So there's a lot of people that like this stock, and I think once we find a double bottom down here, I might take the trade right around 491 and get back in it, run it up to resistance level, maybe 539, or get up if we have another spike on it. And this is the way I trade. You know, I get out on that spike. and I'll pull back. And it happens so many times. I'll get back in on support level. So I think that's about it. Just the moral of the story here is when you're being very cautious when you're in these parabolic runs. And just always remember that they pull back. And look for a 50% retracement. This is what we had here. See? We had a 50% retracement and it pulled back and found support. So you can always take it again and run it back up and keep scalping this thing, but do it on the spikes. Get back out of it. We did pull back to a good support level down here. I think if we pulled back there again and hold, we could run it back up to this resistance level, which were the previous lows at 539. Take that trade. So anybody that followed me in FUBO last week, just remember, do your own homework. Always pull that caution flag out. Take that profit when they jump up and spike. Don't hesitate. Don't hesitate. Don't say I'm going to swing it. And if you're not very experienced, don't start cost averaging down. This was probably my worst cost average down I've done in probably 6 months. I have a pretty good success rating. 9 out of 10. I'll be okay with it. I'll get out even. Because when I'm in danger, I'm going to get out even, or I'm going to take just a little bit of profit. When I'm in danger, I'm going to take a small loss. But if I get caught up in the hype, I'm going to take a bigger loss, and I'm going to learn my lesson from it and not do it again, which I've done it because I get caught up. So that's going to be that. Does anybody have any stocks they want me to look at and we can go over? Ones you're stuck in, anything you want to talk about. And we'll see what we got right here from the top of the list. I'm going to get my pencil and paper out and take a drink of water. We got another hour to talk stocks here. Oh, I want to show you Tesla. I'm going to talk about Tesla real fast. Tesla was a trade that if you follow me in a trade, sometimes it's good to message me and tell me what kind of I can trade any stock any way. I've got so many different tools that I can trade a stock any way I want. I can trade it going down in a bullish way. I can trade it going up. So you got to know how you're going to be trading the stock before you get into it. Tesla is another one that kind of got stuck in, but I'm bullish and I'm caught up in the hype on Tesla too. So we had that big sell-off, and I thought we hit the pretty good little double bottom down here, or we hit a bottom here, and we started breaking out. So I got in this trade, and my big mistake on this trade is I'm doing this in my challenge account. So I've got the PDT rule going on, and I already took the trade in PLTR, and I used it in that trade, and cleaned up my losses that I made on CCIV that second time I went in it. And I was up and I sold it and I made about $60 on it. So I used my last PDT rule, but I had this other account that I opened up, which is a margin and a cash account. And I'm finding it more difficult to trade with a margin account than I am with a cash account, because I've traded with cash most of my life. But I opened up this damn challenge with the options with the PDT rule, and it's just not been, I've made probably 15 grand last year, in the 30 grand I made last year in the account. And then I wiped it down to 1,000. I started a new one, but I didn't want to go through that beating that I did last year. So I opened up a cash account, and once I made 100% profit on the PDT account, I went ahead and took it and added it to my cash. So I've got 2 different accounts now. So I thought I was trading in the cash account when I got in this trade, but I accidentally got in the wrong account and I couldn't scalp it. So I called up my broker which is Tasty Works, and they understood what I did, and so they was able to take that trade and move it into my cash account. At that time, when I was making the call, I was up about $60 on the trade, and I knew that the stock was bearish, so I just wanted to get out with a little bit of profit. By the time they switched it over, I was down. I was down on the stock, and that was about this time right in here, and it just kept pulling on back, pulling on back. So I went ahead and cost averaged down in the trade. And I'll show you my evidence here. Let me see. I got in it right here at 515. On my 115, I got it in here at 515, and by the time that I was able to take another trade on this stock, it had already dropped down to 420. So I jumped back in the trade, and I went ahead and got in it there. Maybe, yeah. And so my average was a 470, 468. And finally, I got out of the trade at 450, so I was at a loss. And then, later on in the day, I got back in the trade. So I bought it here. I bought it here at 272. And it dropped down a little bit more, and I bought more of it at 245, and I ended up selling it at 287 right into close, right at 241. And then the stock went ahead and dove on back. But this was in a stock that was in a downtrend. So I got in here, and I re-entered here that first trade, and I exited right here. And I decided I'm up here at resistance level. We didn't break the triple top or the quad top, and I figured, if we did, we were going to double top and then pull on back. And that's when the selling. And so I kind of just left the trade and didn't look at it for a little bit. And then when I seen it was sold off like it did, and it hit my little support level that I had triggered in here at 421.11, I said, I'm going to get back in the trade. So I got back in the trade, and then I ended up selling it right into close right here. And I'm glad I did, because it pulled back and run into that 50 and ran on back. But this is a hard trade to make. I wouldn't ask anybody with any experience to try to take this trade unless they were playing a put. But I knew that it was bearish that day, and I've told the room all last week that I'm bearish on Tesla for the first time, and who knows how long, because all these other car companies are getting excited. Neil got me all excited. That presentation. There I got caught up in the hype again and took a small loss on Neil. And CCIV, I'm getting hyped up about that. So I've got to put a little caution flag on these huge runs. Neil, same thing. It had the nice little pullback. I mean, we're down here at support level again. And if this pulls back anymore, I might get excited about the trade. So just don't get caught up in the hype, and know what kind of trade you're making before you make it, if you're making a bullish or bearish. So which one do you want me to chart? CCIV, that's the one we're going to do because everybody's talking about it. We're going to start going to your tickers now. And I'm done, and I might extend this a little longer. No, we got another hour. We got plenty of time. So let's put CCIV in here. Everybody's curious about it. I called this 1702 down here double twice Friday. So I think it can pull back down. I think if this thing has a nice little breakout, don't get caught chasing it. Let it pull back to support levels. We're going to look at the 5-day real fast. And to me, that support level can be no lower than this 1645 right here. Why? Because this is where this pattern right here is like a pivot point in this flag, and we have pulled back to that many a times, and we almost hit it Friday again. But we had this kind of extension right here with the higher lows, which made it a bullish pattern. Now, this is a symmetrical flag, kind of on a downtrend. So if any spike up, we'd have to break a resistance level of this. We're going to go with this top right here, and we're going to bring it down just a little bit right there, right under 20 bucks. If this thing goes to 20 bucks and pulls back, it can pull back to this support, these moving averages, maybe the 200 on the daily 1 minute. And you all know how I use that daily 1 minute on the 200. If it pulls back and hits that, I'm pretty much back in the trade. Even on this 5 minute, it held that 200 pretty well. So low support, no lower than 1645. Hard resistance is going to be right up here, right around 20 bucks. Maybe this 1940. If it starts to hesitate there, take your profit. Now, there's a lot of people that were in this trade, and I mean big blocks. And that's something you got to watch. I mean, you got to know your surroundings, and you got to know what kind of traders are trading this stock. I know at least 500,000 people were on this trade Friday, and we're selling it Thursday. They run it all the way from the bottom. They got in when people weren't talking about it. I talked about it. I called it out in the room. Other people in the room were talking about it, so they got in this at a very cheap price. And then they sold when it had that parabolic run. Just bam. You know, when you have these runs, you got to get out of the stock. Unless you want to swing it and take the opportunity, because this is running on speculation, okay? It's not a Tesla, it's not a Nile. It's running up on speculation. It's running up because the chief engineer from Tesla moved over, and this could be the next Tesla, this could be the next Nile, but they're going to be offerings. They're going to have money, because they don't have, they got to have that money. And I think it's in a SPAC too, if I remember right. Churchill Capital, yeah. So, just something you got to watch out for. Strong support at 1645 if we pull back to that area. Hard resistance at 1944. And a gift, anything above that, unless you see something different, unless something else comes out in the news. And the next one we're going to talk about is hello, Limerick. IDEX. One of the ladies in the room and I talked about this one last week. It's been on our watch list. We called it out last week. We talked about it in here last week. Let's talk about it now. Let's see what happened compared to last Sunday. 5 days ago. So she had her nice little run. Called this lower support here at 258. We had this 276 was the next one. And then she went ahead and had that nice little breakout and pulled back. So we found an equilibrium, a pivot point area. Now this $3 has got a hold. This is a momentum stock. Let's look at the 20-day. You can tell. I mean, there it goes in big runs. One day it ran all the way from here and then it pulled back. 50% retracement. There we go. 50% retracement, pulled on back on the 5-day. Maybe on the 1 day, 1 minute. Let's look at it, see what it says here. Yeah, this was a real ugly sell-off. This could be ready for a reversal. I want to look at the news. Trading higher after it announced a mobile energy global. So delivered 439 units in the month of December. Here's why BlackBerry, Spotify. So you got news, read that news. Always look at the news. Make sure it's a reason for the stock to run. Different news reacts differently. But we're bullish on this one. This is in the EV car supply chain. I'm going to pull up at 20-day one more time and just have a real good look at it. It's a real strong support level here at 275. Especially if it hits that 200. So if we get a double bottom on this, this is probably where I'd take my entry at 275, 276, and run it up to these next resistance bars with a hard resistance right here at 362. That's what we got to break. That 362 area. And this is IDEX. Again, strong support at 258, 276. There's a real strong support. Resistance to break is going to be up here at 362. I like it. We liked it last Sunday and had a nice run. Let's see if we can pull back. Might hold support level right here at 276 and go sideways for another 5 days, for another week. Unless it gets some news, then we got to see if it breaks at 363. IDEX and GAXY. Now, see, this is a penny stock. Galaxy Next Generation. I want to look at the news. Galaxy Next Generation purchase order of Christian school. Establishes equity agreement. G2 visual alerts. Awarded co-shield contract. So it's got a lot of good news coming out of it. This is a penny stock. I used to play these for a long time. Draw a couple of resistance levels right in here. Right there is a good one. Support level is going to be lower right around here at 196. Let's pull up the daily 1 minute. Yeah, I'm not too... This is a risky trade. This is a risky trade. If you want to try to take a risk, buy it at a good support level, maybe right around 2 cents, and take it up to about 3.6. Got a little resistance level right up in here, 294. So that's kind of how I think of that. A little under 2 cents to get in, and maybe take it to around right around 3 cents. Up to 3.6. I'll watch this next week to see what happens here. GAXY. Next one we're going to look at is FCEL. DMLK FCEL. Let's look at it. I like FCEL. I like it a lot. This is a stock to play. This is going to be, and that's another thing we got to think about. If Biden's going to become president, we want to make sure that we're looking at small cap green energy stocks. Hydrogen, anything to do with hydrogen, anything to do with batteries, anything to do with those are my two EV cars. Any kind of components that go into the EV cars. People are going to be financing them pretty cheap here pretty soon. That's what's good about Tesla. They're trying to always undercut anybody else. Steep price downgrades fuel cell energy. Who's this? JP Morgan on the 14th. It says hydrogen stocks, plug power are at a steep price. So when somebody comes out and talks smack, that's when you want to start to be a little cautious. And this came out on the 14th. So look at the 20-day. See what happened? We started into a downtrend. So we found a support level right here in this channel. Now, this is going to be a strong buy. FCEL, if it gets down here right around the 1330. Why? Because these previous highs on the 20-day chart. So set you an alert, and I'm going to set one right now. Just a little bit above it, right around 1363. Now, if you keep coming to these 2-hour sessions, I want you to tell me if I'm right or if I'm wrong about these trades. Because I was looking back at one the other day that we called apps. I said it was going to pull back to a certain number, man. It ran up $20. So if I'm right or wrong, I want to know about it. I want to reevaluate it, see where I'm wrong at. So I think this can pull back to this 1363 area, and then we start to retrace back up. Every week's a new week. You know what happened last week, they might forget about. And this thing could just go ahead and start to take off up on some news. So remember that. 1363 is going to be your low strong buy. Your second support is going to be right here at 1456. Right here where it pulled back and we had that breakout. Right at 1456. And that first one's going to be right here at 1525. Resistance to break, you can see it right here. We tried to break it Friday, couldn't do it, and that price is right there at 1638. Then you can run it on up to these resistance levels. But this is going to be a hard resistance. I'd like to see it pull back to the strong buy at 1363. And these other three support levels. You got that? I'm bullish on this trade. 1346, 1363, 1456, and 1525. Resistance to break at 1641. Then you can bring it up to this higher resistance right up here. That spot where that candle is at 1759. Now part of these lessons is to teach you how to find supports, pivot points, and resistance levels. And you all know what a pivot point is. Pivot point on this chart, if we look at the 20-day, it's going to be right here. This is going to be your pivot point. And that's going to become support. And usually on a pivot point, when you're going down in a downtrend, that pivot point is a support level. It's an equilibrium on the 20-day chart. It's an equilibrium where we had the breakout, where we had the double top, triple top breakout right here. She ran up pretty good. So that's FCEL. I like it. Next one. Jim, you're the man. I try to be sometimes. I wasn't the man on Fubo last week. So if you have time, SOS apparently in the crypto mining. If I miss a ticker as I go down the line here, let me know. I want to look at the news. Limit announces exercise of warrants. So they exercise warrants to get some money. That's good. That's never a bad thing. It's never a bad thing. I'm going to pull up the website here. I'm going to look at the float. And it doesn't say what kind of float it is. Here you can always pull up the website too. If you didn't see how I did that, I'll show you here in a second. China, it's a China play. Okay, that's a red flag. But with the new administration, and we know that he took $1.5 billion from him already, China will be a little bit more at ease with America because we'll be an appeasement president. We'll be appeasing China, not Russia. Trump appeased Russia because he didn't want to get into a war with them. So you just always got to look who they're appeasing. So I think China could be a reversal sector next year. That's just my opinion. So I kind of like maybe, let me look at the yearly chart on this sucker. See, it's kind of a jolty little chart. I'm going to find an equilibrium in here on this chart right here, and I see it right here. Okay? That's the first thing I look for when I'm in a stock, is try to find the pivot point. The pivot point. And right now we did almost pull back to that pivot point. Now I'm just going off these previous highs we had here. All these previous, it couldn't break. So that's kind of like an equilibrium. I want to find one spot below it, and that's going to be right here on this candle right in here. That's going to be my lower support. Then I want to find one more right down here. Oh, beautiful, right there. That's perfect. Okay, now I want to find anything above that pivot point on the yearly chart. I want to try to find the most matches I can get as I go down through. And I'm using the bodies of the candles, not using the wicks. Now, if the wick confirmation is there, then I'll take it, like right in here. But I like these bodies right in here, and I'm just kind of scoping it out at 225. Then the next resistance is going to be right up here. I see this. I'm just going to kind of run it along and see if I can find. There's an equilibrium right there. Equilibrium. That means other places where we've had the pullback and we've had the upward trend. Then the final stage of resistance is going to be right here. So let me find out why this pulled back here in the last couple of days. There's no reason. Gross proceed, okay. SOS announces exercise of warrants. That's why it pulled back like it did. So it's nothing big to worry about. I think we can retrace back up. So let's look at the 20-day and see if I missed anything on the 20-day. Pretty much spot on. We'll go up here to the double top of right around $3. We got what you call this is almost like a J-hook pattern. And I'm finding a real strong support level in this channel right in here. You see where that 200 touches right there too? That could be a solid support. We bounced off that 200. We had the golden cross right here. Golden cross. So when the 50 crosses up above the 200, we had the death wish right here. Death cross with higher lows. So it was setting up. It was setting up, and then this day here is when you could tell that this thing was getting ready to break out. So Jimmy likes it. I think we just pulled back here just because of Friday, the way Friday was. Friday was a if you all have a scanner, you know, once that scanner started going green, I started buying stocks. But I scalped PLTR first thing in the morning. Made some money on it. I think this is in the move to move up. If it pulls back no lower than that 203, 208 area, this is SOS. It's a China play, but I know we're going to have an appeasement president, and China likes that. They more or less bought into the election. So 254 is your next resistance level, and then you got that 277 area, and then a hard resistance just under $3. But we got to break this. We got to break this 250 area, 251. Okay, pullback support. I'd hate to see it go any lower than that 203. SOS, sending out an SOS. Okay, thoughts on MKD? I'm going to keep an eye on SOS because I think we can probably scalp this baby. Day trade it up to resistance level. At least back here. This is a nice little sell-off. See what happens when you have these little sell-offs that kind of rebound a little bit. This one here was a pretty healthy one and started having that curve up on the fish hook. So the next one's MKD. Now, you know I'm not always 100% right, but I'd sure appreciate it if you hang around and you're in the next 2-hour session, you let me know, Jim, you did a good job on that. Or, Jim, you kind of were a little off on that. We had three black crows right here. Hammers. To me, is a positive momentum trade for it to move back up. These are called hammers here. And if we can break this resistance here at 81 on MKD, right there. If we can break this 81 cents, we're going to go up higher. Pull the 20-day and look at it one more time. We'll look at the year real fast. See, I forgot to look at the news. LI tendered registration of chief officer. Personal service. Stephen Fu. He sounds like another China play. Am I right? I want to see the float. And then I'm going to take a drink of water. Oh man, this thing's really down. It's definitely a downtrend. So yeah, you might have found a bottom on this one. MKD. It's a 35 million float. Definitely a China play. Can't read any of that. Usually I have. Oh, he says he's going to have a bologna sandwich come Friday. I want to see what this company does. Jim, think. I'm getting a little excited on this trade. Well, come on. You're not being fair. I'm going to trick it. Gotta see what they're into here. I can't read Chinese. Modular Data Company through the subsidiaries operates chemical e-commerce business. People of Republic of China. The company operates technology-driven platform, connects participants. Through that delivers e-commerce solutions, software. They do all kinds of stuff. The company was founded in 2013, Shanghai. Announces a chief officer. They got a new chief officer last month. Change in independent registered public accounting firm. Announces a private placement of $5 million. Convertible debt's good. Okay, so I kind of know what they do now. We're going to have low support down here at 57. That's got to hold. 81.83, and I think we can bring this thing up to resistance level. Well, we got two of them. Got this one right here at 93. Then we got this other resistance level right here at 105. And then take it up to about 117. It's strange, you know, years go by. I've always had that 105, 107 as a good pullback support or a good breakout resistance. And 119 always shows up around 126. I mean, it just repeats itself constantly. Okay, this is good. 57 for a low, strong buy if this does not hold. Now, if this 80 cents holds, we can take it up to 93. 105 and 117. I think this would be good for a long swing, unless you wanted to wait for the volume to pick up. If we get a green candle here on Monday, this thing can start to move up. If it gets social media attention, the thing can start to pull up. Hard resistance is going to be that 105 area. See where we consolidated here for a couple, 3 months? She'll definitely run back up that 105 and probably pull back. And then maybe back to that 93. But that 105 is going to be your hard resistance. Then you could probably take it to 126. I'm going to watch this next Monday or next week. SOS and MKD FCEL. So far, we've had some good ones. I'm iffy about Galaxy. IDEX, I like it. And CCIV is a momentum trade on speculation, but it's being compared to the next Tesla. I don't think it's the quality of Tesla. A couple things I don't like about the car, but there's a lot of things that the management I do like. So the next one we're going to talk about, Mankind LMND, another oversold and lemonade. Now this has some real good runs and real good pullbacks, right, Amanda? We know that, don't we? Light up my life. Okay, solid support at 134.23. Let's go to the 20-day. Yeah, I like this 136.80 area, or it can hold off this 200. See how we've bounced off this 200 on the 20-day? If you don't have a chart with the 200 SMA on it, jet. Because look, and she likes that 50. So, but every time we touch that 200, it likes to bounce up. And look, it runs right into a good support level, right in here. See that? Look how I drew that line right there perfectly. 142.87. So if that doesn't hold, that 142.87, you'll probably get down here to 136.80. To that 134.23 for a very strong buy. Well, strong buy is going to be down here at 131. That's going to be your filthy strong buy. But if this support level holds, which I think it can, see what happened here? Nice little spike up. See what happened here? Nice little spike up. I mean, that's a pretty good trade. 142 to 156. That's, $14 trade. And they're big candles. Big candles. So the trend is good. Let's see if we can hold this 142.87 and take the trade Monday on pullback. And run it up to this resistance level of 152. That's a $10 scalp. Maybe. I wish they'd have named this company different. I don't like the name. I just think it's too childish. Why lemonade? Why didn't they call it Jamaica Blue Mountain Coffee or something? Lemonade stand, it sounds just premature. I think I've said that before. 142.87's got a hold. Resistance to break at 152.76. Yeah, let me see. I got lemonade in there. I got Mankind. You and me both. That's right. Hi, Jim. Have you had an opportunity? Please go over store. I don't think I've ever looked at store. Let's see if I did. If I have any lines on here, I've looked at it. No. So, first thing we got to do, you know me. Let's get this China crap off here. Let's see what's in store. Oh, Jim. Store Capital Corporation. Internally managed non-lease real estate investment trust. Real estate I'm not too bullish on. Operation of real estate, which is a target market for the expiration of store capital. 25, okay, they have more than 2,500 properties. United States. I'm going to check out the website, see how pretty the website is. So far it's taking time to come up. Properties, 30 years. They've been in business for a while. Okay, I got that down. I'm gonna check the float. I go through all these. You got to go through your due diligence. Now it's been on a nice uptrend. I like this. I like this. I'm gonna see how it looks on my 200 SMA on a year. Yeah, see that uptrend? Pretty good. Definitely got hit hard during COVID. We're up almost. We almost hit a 300% gain. So we're going to look for a pivot point on this yearly chart. And I think it's probably, I'd like to say it's here, but I'm not going to do that. I think it's right here. 27 something. Then we got another support level right there. And then I'm going to try to find an equilibrium in this channel here. That's going to be, bam, right there. It's had a nice little breakout right here. Nice little breakout. That's an ascending triangle. See that? And we had to break out and it pulled right back to that horizontal line. Bam. Bam. Resistance. Now I'm going to do one more thing. I'm going to go back 3 years on this. So 3-year high is at $41. Strong support right here at $29.16. I'll show you how I got that $29.16. See, we tried to break out here. Actually, that could be a pretty good little pivot point on a 3-year chart. To me, that's going to be a solid support. See if we can pull this up on a 20-day and we can see that green line. 29.16 is going to be your solid support. Your second one's going to be is 29.77, and that first one right here at 30 bucks. Now, if this pulls back to 30 and bounces up, you could have some resistance level right here, right around the 31 something. I would see if it wants to pull back one more day and maybe hit this $30 area. If that $30 shows up and starts to reverse up, you can take it back up a little bit and run it up to this resistance level of 31.18 with a long of 31.83. Store. That'll run right in here to that 200 on the 20-day. Strong buy 29.16, third support 29.77, second right here at 30.06, then 30.58 for your first one. Resistance to break is going to be the 31.18. If you can break that, take it to 31.82. Store. I like it. I don't like the fact that it's a real estate stock because people don't quite know what's going to happen with real estate, and it depends on where that real estate is. If it's in New York, it's not going to be good. If it's in a lot of these bigger metropolitan cities, it might not be too good. If it's apartment buildings, it could be halfway decent. If it's retail, brick and mortar, I would second guess it. People are ordering online. This COVID's changed everything. It's going to change how we eat. It's going to change how we live. It's going to change how we exercise. Piton is a good example. So the next one, Fubo. And we already did Fubo. Oh my gosh. Francisco, you kind of overdone it here for me. Which two do you like the best? I'll do the first one. We're going to look at MVIS. Oh, you want me to look at MVID too? Okay. We'll look at Microvision and Company. This, to me, sounds like something that could be tradable. Look at that. Nice little run, pull back. Excuse me. Look at the 1 year on this one here. I'm looking at a support at 578. That's got to hold. If not, it's going to be a real strong buy at 490. Okay? That 490 area. If it dips down there, that's a 50% retracement on the yearly chart. It also lines up with the with the pullback here. It'd be like a double bottom. Resistance to break is at 556 with a hard resistance 702. Then you can run it up to that 832 area. But let's look at the 20-day. I know I missed something in here. Not much. Not much. I like this area right in here for a hard resistance at 734. Then a pullback. We've got to find something in here. That's going to be right there at 609. Okay, strong buy at 470, 490. Very strong buy at 490 if it pulls back. Your third support is right here at 578, 605. Let's see here. Oh, I got one I want to talk about too. We talked about it last 2 weeks now. So we got a strong buy at 490, 578, and that first one here at 613. And then resistance to breaks can be right around 734. And then maybe take it if that breaks at 734, 755 area. We can take it up here right around $8, 830. I like MVIS. I like it more on a pullback. Maybe bounce off this 200 like it did right here. So anywhere in this little channel right in here, that between that third and that second support area, that should hold. MVIS. You're going to be blowing kisses at CCIV. Well, I hope I'm on the other side of that. So we got MVID next. Or did we talk about that already? No, it ain't MVID. What's that ticker? MVID doesn't come up. Oh, MVIS. I got you. Don't forget Flex. How's that? I'll flex for you. I always like to flex for the ladies. I used to do it when I was a bodybuilder. Now I can barely pick up peanuts. Okay. Flex. Flex announces date for third quarter fiscal earnings. So we got an earnings play here. Benzinga top up downgrades. We got a neutral. JP Morgan downgrades Flex to neutral from on 12/18 to $17. Harris directors. Okay. So we're going to flex this down to 1763. This is going to be your support channel right in here. Going to be a strong, if the 200 doesn't hold on flex, if this 200 doesn't hold right here, we're going to move up. Now it's had a pretty good sell-off on Friday. It could rebound off that sell-off. They like to do that. We had a nice little 3 black crows here. She went ahead and broke out. So if you combine these together, right now it's not, but that's a hammer. So I'm thinking the equilibrium on this chart is right at around 18 bucks. If that doesn't hold, we'll pull back to these other 3 support levels. 1780, 1763 with a strong buy at 1741, and then we can retrace it back up. So set you an alert. If this 18 doesn't hold, set you an alert for these 3 down here. That's at 1741, 1763, and 1780. Okay? Resistance to break is going to be this 1747 where we had this top. Right there at 1848 to 1869. If this 200's got to hold right here. If not, it'll pull back to these other support levels. Strong buy, and I'm going to set an alert right here, a little bit above it. Kind of like flex. Let's raise it up to 1750. There's my alert for the buy down here at 1750. If that pops up in the room, I'm going to mention it. Flex. Okay, POWW. That's the one that I want to look at. Francisco, you're wearing me out. We got a nice little flag here, symmetrical flag. This is on an uptrend. Remember I talked about that earlier? Where did I talk about this baby? See what happens when you have a symmetrical flag? You usually have a breakout stock. Now, POWW makes gunpowder. So always when you have a Democrat in office, guns sell like hotcakes. Because they want to think they're going to take away their guns, which I don't think will ever happen, but there will be more regulations, especially with the country the way it's acting. It's acting pretty stupid right now. A lot of hate. I hate it. I hate hate. So we got us a symmetrical flag. See that? I think it's getting ready to break out again. So we want to try to find resistance levels. We found one right here. 715. Whoops. Right there at 715. I'm not a devil's advocate for hate, as you all know. I say give peace a chance. If it does not hold this flag, it'll pull back to this support level of 639. Now it'll be a strong support level. I don't want to see it going lower than that. If it does, 577. But for right now, it's a bullish flag. This is called a symmetrical flag, and I think we can run it up to 8 to 794 for a hard resistance. Anything above that's going to be a gift. POWW. Go Chiefs! That's right. I'm a Chiefs fan. So let me see here. We've got POW You got to see me flex. Oh, thanks, Jimmy. Oh, gosh. Please don't talk sexy to me. What do we got here? I've been making money on all of them. Good job, Francisco. Facebook, if you got time. Let me see. We got 15 more minutes. And I'll go over beings, we might have some latecomers in here. I'll go over CCIV. Now, I've recorded this, so this will be back up. If you hit that like button, I sure appreciate it. If you have any comments down below in the comment section, I'll answer every one of them this week. If it's a stock we talked about. And I'll give you support levels and resistance levels. So if you have any comments down in the, not in here, but in the chat, but down below the comment section, I'll be sure to answer every one of them. And but always hit that like button. Lets Facebook know that, or Facebook, it lets YouTube know that I'm trying my best. And if you don't like it, thumbs down, but give me a reason why you don't like it. I might improve on that. I was a little rusty when I started talking about the parabolic run. Can't even pronounce it. But I think you got my point. Don't let your emotions get caught up in a trade. The only stock you can be bullish on is Tesla. The only stock you can fall in love with is Tesla. So let me see. Facebook. Damn, boy. Amazon, we're going to be we're bearish on it because of the sentimental that's going on with it right now. Same as Facebook, but I've kind of noticed something about Facebook last week, and I think the week's over with now for the bashing of Amazon, Google, Facebook, Twitter, and Snap. All the social media stocks, I think, like I said, people have a short attention span, and once it pulled back to a certain support level, these stocks are going to be nice to run. Now, see, we've had a real good pullback on this trade here. I'm going to extend this downtrend down a little farther to the right. See what I did there? We did try to find some support level right here, but it went ahead, and I've showed you about that. Remember that chart pattern I showed you earlier? Look at this. Well, that's not the one. Damn. It's called an inverse descending pattern is what it's called on Facebook. Let's look at the 200. So we pulled back to this 200 day. See what I'm talking about? That's a solid support level on the year chart. Now this thing could start to retrace back up. Okay? We got a nice little green candle here and close. I think we've had plenty of days for the sell-off, 2 weeks, for the bad sentiment to go out. You know why it pulled back? Because of censorship. I think if they're going to censor people, they should censor all kinds of groups, and then they would have no groups in their room. If they're going to censor people, censor the Indians, censor the Chinese, instead of just conservatives. Censor Antifa. Censor all them hate groups. Censor them right-wing wackos. But to censor normal people like me, I've been in jail before. Facebook jail. Proud of it. Yeah, we've got a nice little pocket pivot. Anybody know what a pocket pivot is? That's usually a sign of a reversal play. This here's a pocket pivot after a good sell-off for about 10 days. So that's another lesson to learn. Pocket pivot. Right here. You don't see that pattern maybe right in here, but it's not complete like this one down here is, especially after the 10-day. And we definitely hit that 200 on that year. So that's 2 confirmations that we could have a reversal play on this stock. Plus it pulled back to this support level. This is a pivot point on the yearly chart. There's 3 confirmations. Okay, 3 confirmations. The 4th one is short attention span on traders. And number 5 is this thing makes money. It's never hardly ever had bad earnings. So there's 5 good reasons to probably take this reversal trade. Now I know people, we've been calling it bearish for 2 weeks now, and I think we're in pocket pivot. The resistance we're going to have to break is going to be this blue line right here on the 20-day. Let's see if we can pull it up on a 20-day. Facebook. This could be a nice reversal play. Resistance to break is going to be right here at 250. Right here at right there at see, there's number 6 reason. We're running into that 50-day SMA. So there's all kinds of good reasons to maybe take this trade come Monday. If it pulls back, I think we're going to probably come out of the gate Monday with it going to try to break this 253 area. Because we had a support level right here at 250.84. We closed at 251.36. Anything below this is going to be a strong buy. So set you an alert to get into the trade if it pulls back to right around this 248. That's where I'm going to set my alert. I think there's going to be a little bit of people out there that are still going to be bearish on this stock, but I think we're going to have profit takers on here come Tuesday. So I got my little alert there at 248.35 to get into the trade. If this holds at 250.84, we'll definitely break a resistance of 253.61. Number 7, this chart's easy to read. This chart's easy to read, so there's a lot of good things going on here. As much as I've badmouthed Facebook, I think we can break resistance level of 253.61 easy next week. Amazon. So when I say that about Facebook, I want to look at all the other social media stocks. Amazon done a few things that were unprofessional too. And all these big companies are run by, progressive liberals. We broke out of the triangle I had on this chart, but that was before all the bad sediment. We've been holding that triangle pretty well for almost 5 months. You see that? You know what? I talked about this flag earlier. I said this was a symmetrical flag from an uptrend. And I'm bullish on Amazon. I've got a hard target on it, but now that all this negative sentiment's come in, I'm not as bullish, so I got to kind of rethink things Monday when I go to look at this stock. We didn't hold that support level that we needed to right here. We dropped down below it for the past week, but we held support right here at 31.0306. So if we hold that, we're going to be fine. If not, we could pull back to the 30.58. And then maybe that 30.35 for a very strong buy. No lower than this 3,000 mark. That is going to be where I'm going to take the trade if it does pull back. If we do have another week of pullback on this one, definitely going to be that 3,000 area is where I want to get into the trade. Now, if she starts to reverse back up from this support level of 31.03, I think we can take it up to 31.73. Take it back up to this blue line. That's going to be a hard resistance. That's going to be Amazon. So, resistance to break is going to be this blue line on that triangle, symmetrical flag at 31. We're going to see if I can chalk this up here. right there at 3168.36. That's what we got to break. Then we got another resistance right here at 3127. So if this 3100 holds, we're going to be fine. If not, we'll drop down to these other three resistance levels with a strong buy at 3000, 3035, and 3060, with a resistance to break up here right around that 3173. Amazon. Oh man. Okay. Well. Hey. You missed my AMD. William, I'll get you in there. I'm kind of skipping back and forth now, so we're kind of getting down to closing time. If I missed one that you're real curious about, and if you put them down in the comment section down below, I'll be sure to draw some support lines in for you and pivot points. So AMD, AMD I'm bullish on. I got to see if we got anything in here. Benzinga, Bulls and Bears, AMD, Marathon, Tesla, Uber, Green, blah, blah. Now they can't be bearish on my AMD. I want to see what they bastards say in here about AMD. AMD, okay. May start to crumble if its rival gets back on its feet. Oh, you know who AMD's rival is? What had a good run and had new management last week on AMD? Intel. So that's what they're saying here. AMD is going to be like, and Intel's been on probably one of the poorest run countries like IBM. That's right. Intel. So Intel's one we want to watch. I think it's going to pull back a couple more times. But like I said, the short attention span on traders. And you'll probably get some more bad publicity. The company is a wonderful company. We called this sucker down at $10, and it ran all the way almost to 100. So we got a real strong support level right here, where we had this peak. But the sentiment right now is Intel. There's another one right down here at this level here. I'm going to just do green lines where I think this is one you're going to have to follow the trend on. It's going to be a scalper trade. It's not going to be a long hold. And then we're going to top another one right down here. I'm going to look at the 20-day real fast. Now we broke a very solid support right here at 89. See that? Let's get back here to the 3-month. See, I had to go to a different time frame when I'm looking for these supports. We broke a very serious support level right here at 89.48. So this, that's going to be your resistance. I think this can pull back and be like a good little bounce up play. That's what I'm thinking. I'm thinking that very seriously. Just so choppy in here, it's kind of hard to find good support level. Right there. Okay. Ah, there it is. Finally found it. Right here. 83. Let me see here. I'll make this bigger. Price level 15. Let me take a guess. Nope, that wasn't it. Yeah, it was. Ah, beautiful. Okay, this is going to be your low support right here at 83.68. It's kind of hard to see. I can only see it. It's right here off this candle base body right here, and I see it kind of matching up with these right in here and this right here. So that 83.74 area, jot that down for a solid buy. I think it is going to pull back. 83.74, is that what I said? Yep. So we'll raise it up to 83.80. Give us a little equilibrium, give us a little force field there, a little beam. Set it at the ask. Okay, strong buy at 83.80. Your second support at 84.50 on this place right in here. Damn. Okay, strong buy at 83. Your second pivot point area is right here at 85.65. And then if this holds, which I don't think it's going to, I think we're ready for another downtrend. One more little day or a couple days of downtrend, and then you'll have a retracement back up. Okay, I'm bearish, not as bullish as I was in the past. We are at a 4-day sell-off, so the 5-day rule does take place. Tuesday, if this thing pulls back, you could get a retracement back up and scalp it. I wouldn't want to hold it long until you start to see Intel turn a different direction. Okay, I got calls on AMC Moneymaker. I got AMD. We did Amazon. Intel, yes. You want me to look at Intel? Is that what you're wanting? I had one in mind too that I wanted to talk. Oh, TSM. What the hell? INTC, you idiot. Oh, take a deep breath. I still can't get it right. INTC. Jesus. Oh, you. We called this at the very bottom. Remember when I talked about it? Said it was a strong buy down there around 40 some bucks, 44. You'd had to swing it for a long time. Then I said a hard resistance was right around 52. So here's one of them breakout stocks on speculation because they got new management. There's nothing's changed, but I think the course and their path will change. That's what really was the catalyst to bring this stock up. So we're going to look for a pivot point. We're going to look for a support level, and that's going to be no lower than this 54.64 if it pulls back. That first one's going to be right here at, that's what we want to hold, 56.92. And the resistance we want to break is going to be this 59.50. Now, if I look at the yearly chart, we're getting up here to the yearly highs. So this had a pretty nice little bounce into this channel. Low support's got to hold is going to be this 56.25. And this stop placed right in here. I think it's going to pull back. I think it's going to pull back a little bit, but it's going to start being bullish, which means any pullback is going to be a strong buy. It's not going to dive down here to where we were down here for almost this long. I mean, this is pathetic. And it's running on speculation because they got a new manager. They got a new CEO. And that's what this company needed. It needed a change. It needed probably change some board directors too, which you'll probably start to see with a new CEO in line. Hard resistance to break is going to be this 59.50. If we can get past that, we can run it up here to right around. Every company deserves a second chance, right? Okay, strong support here at 56.92 to hold. That's not much of a dip. So if it pulls back, that second support's going to be here at 56.20, 25, then 55.49 with a very strong buy at 54.64. And that's where I'm going to put my alert to buy it at. I'll just go, what did I say, 64. We're going to bring it up to 56.70. Put it at the ask, below, and create. So I'm going to get rid of this one down here. I could have got in that trade at my support level. Should have probably done it. But it didn't trigger for some reason. Strong buy at 54.70, 55.49, and 56.25. And if 56.92 holds, we'll take it back up here to 59.55 to break. And then you got your long at right around 60.52. Intel. LMFA, DraftKings, Zoom. Man. Okay, we've got a few more minutes left. Then I got to get, I'm going to show you what I made for dinner, for lunch next week. Anybody tell me what that vegetable soup? Josie, you think it beats that brisket that I showed you the other day? That's what I'm having for lunch next week. So I've already got my lunch prepared for next week. I cooked it in my Instapot. It's all fresh. And I tell you what, it is delicious. Delicious. Okay, well, we talked about Intel. We got some Zooms here. We did Zoom. You can always go back and look for Zoom after the recording's done. Planning is key to success. Shrimp. You want me to do shrimp? LMFA. LMFA, LM funding. LM funding share spike on season high at 9%. Tweets your association ready for crypto. Oh. Bitcoin. This is when you want to follow with Bitcoin, okay? If it pulls back, this will pull back. We got a support level on LMFA there with strong buy right down here at 129. I'm going to put 130 for a strong buy. That's going to be my strong buy territory right there at 130. Resistance to break is going to be this 213 area. I'm not just spitting out numbers. I'm trying to be as honest as I can here. 213 is going to be your hard resistance to break. If we can break that, we can bring it up here to right around 246, 244 area. and then hard resistance right here at 273. I think it's going to pull back with Bitcoin or run up with Bitcoin. Strong buy at 130 with a resistance to break at 213. LMFA. I'm trying to remember the other one. Gosh, Kern, you're starting to pour it on now. Kern. No EE. EH. Well, I'm going to have to let it go here pretty soon. I did SOS earlier. China play, if I remember right. You can go back to the recording when I'm done with this video and look at SOS. What's moon? You're not going to moon me, are you? Oh, I think I'm about done here. I'm about burned out. SBLK. Okay, I'll get it in there, means you want me to do that. Dry bulk container shipping companies. Oh, this could be something that's quite interesting. You know, shipping's going to be, once COVID is done with, shipping stocks are going to be on the run, especially after spring's over with. I think Biden's talking about 1 million or 100 million by the first 100 days vaccinations. Let's look at the 20-day here. Pretty much, I'd like to see this level here hold at 1091. That's going to be your solid support. 1091 to 11 bucks. I think if that holds, you'll be fine. Right there at 1091. That's where I'm going to set my alert at. And we're going to go back and look at that year chart again. Okay, ask. Resistance to break is going to be this 1233. I'll put a green line there. I got all these alerts set for next week now. Thanks for you all. Let's go to the year chart, year daily. So we broke out of a year high. See that? So this could pull back to that yearly high. That's going to be right there, right around where I said that 1092 is. I'd like to see that hold. Strong buy down here at 1014. And it's had a nice little run, so we want to, 5-7 day rule in effect. I think it can pull back to that 1014 area if that 1092 does not hold. SBLK. And that means look at the other shipping stocks. Moon. You keep wanting me to look at Moon. I'm going to do it. This is your last one. You're tearing me up, Francisco. A San Francisco treat. So let me see what we got here. This is new, ain't it? This ain't been around very long. What do they do? It's out of the world innovation with Moonshot ETF, the Moon Innovations. I got to see what they do here real fast. What do they do? Oh yeah, shrimp. You sure did. We'll look at shrimp. And then I'm going to call it quits. I forgot what I was looking at. Moon. See, I'm losing attention span myself. It's an ETF. That's a negative. The investment seeks investments before fees and expenses that track the S&P moonshot circumstance 80% of its assets and securities in the index. Okay, well that's halfway decent. Company so I have to kind of give this a half a moon, not a full moon. We got three support levels on this stock. You got the 35.51, you got 35.07 and 34.49. Actually, it could pull back here to 34.27 for a retracement back up. This 34.27 is a real solid support to hold, okay? It's where we had the gap, and that's where we had this resistance. So that's going to be like your equilibrium on the 20-day, your pivot point. So if this thing pulls back to 34 something, I think you can be in a good trade. I'm going to go ahead and then I'm going to do shrimp, and that's going to be it. The resistance to break is going to be right here at 36.82 and then double top at 37. I think it's due for another pullback just by looking at the pattern here, with a strong buy down here at 34.26. Moon. Mr. Happy wants EH. I got to satisfy Mr. Happy. Look at that J-hook pattern. Gosh, what a run. So here we talk about them Parabolic runs again, 5-day rule. Hit the 5-day high and pulled back. Yihang Holdings. Bam. Bam. 20-day. 12 industrial stocks that are moved up. Company, no specific news justify the action. So that's a red light. Not seeing any company specific news to justify the action. That's a red light. This means it's probably a low float. And what was that again? That was EH. Yeah. FinViz here. 31 million. That's a respectful float. I agree with that. Okay. I like this little turnaround it did into close. I like that. But I think we're going to pull back one more time down here. This $37.90, $38 area needs to hold. If not, we can probably get down here to right around 35. And then strong buy right at 33. Then you'll have another little hook up. It'll hold that 200 on the 20-day for sure. And that's at 31.44. I have to watch this one come Monday, Tuesday, and just see what kind of pattern it is. The TTM wants to kind of turn around, I think. If I start seeing some red dots, I might jump in and scalp it. So this has got to hold. 38.01, if that doesn't hold, we'll drop down to the lower support level right around 33.57 with a strong buy at 29 bucks. That's where I'm going to set my alert. Then I got to go. I got to go party. Oh, I got to do shrimp. So that's where my alert is here, 2902 for a strong buy. But I want to see this 3801 hold and maybe retrace back up to these other two resistance levels. And shrimp, we traded shrimp together, didn't we? This one's a good trade. This is I've done a video on this, so if you go back and look at some videos that I've done, you can see why I like this stock. We had a nice little flag right here, and she pulled back to a strong support level. So I'm thinking, you know, that 31 area needs to hold. 31.49. Now I want you to look at this run the stock's had. Shrimp is a company that produces shrimp on the mainland. It's a green stock. It keeps the big ships out of the ocean. And what I understand, these shrimps are pretty good. They've been in the family for over, what, 30 some years or longer. But we called this trade down at 10 cents, 11 cents. And she's ran all the way. We were talking about it even down here at 7. And she's had the nice run. Vegas and I took this trade up to, if we go back 3 years, this is the run that we called out in the room when we were trading together. And she's done nothing but pull back, and then we retraced back up here just a while back to this resistance level. And see, this is why I like the bodies of the candles. That's why I like the bodies of the candles, because look at what happened. It ran right into that body. We've had nice 3 white soldiers here, and it's consolidating into a pennant flag or a symmetrical flag. Shrimp is a real good company, and I think this stock, if you can get back in on a pullback at a lower support level to go long, I think you'll be real good. Now, I mean, if this thing goes like 20 cents, I would load up the boat. 31.56 is going to be your first support level. And resistance is to break. It's going to be this 60 cents. If this can break out of this flag right here at 46, 47 cents, we'll take it up to 60. And then you're going to have a hard resistance, real hard at 76. Any pullback on this stock's ideal, especially at 31.56 and maybe even right here at 36. You could probably get a small pullback. Okay. If you have time, I'll do one more. That's it. Michael, we traded that pretty well. TTOO is the last one. I really do appreciate it. If you hit that like button, that really means a lot to me. Now I can show Vegas that people like me. Clear the drawing set. 2 fumbled up. You know what I've said. Those were 2020 trend lines. Biosystems. Looks like it had a nice little breakout in the past 4 days. Let's pull up the 200 here. Ooh. See how it found support right here when them two squeeze? That 200 is a real strong support area. I'm looking at 160. And this level right in here. This spot right here at 150 with a strong buy down here at 142. And resistance to break is going to be that $2. I'm looking at this pattern in here is where I'm drawing these trend lines at. Okay. Biosphere tweets a study found in the COVID-19 secondary emission, longer stays in the hospital, had longer, okay. biosystem tweet. A study found that patients with severe COVID and secondary BSI were sicker upon admission, had longer hospital stays, and poorer outcomes. So it panels can ID primary COVID-19 secondary bacteria and fungal infections. So this is going to be short-lived. As long as COVID's around, this stock will be bullish. But I think strong buy if it pulls back to 160. Needs to hold in this 142 area. Well, it's 150 to 142. I'd be scalping the baby. I don't think I'd swing it. This is scalping material. Hard resistance to break at 183. I'm exhausted. And this 150 is going to be a strong buy for a scalp. TTOO. Final call. 142 to 150 for support. Resistance to break is going to be this 183. Long up to 210. And that's where you want to take your profit. We'll try to break 197. Yes, and they doubled their capacity. Shrimp did last year. Now they're going to triple it because they're going worldwide. So shrimp can really be a good trade. Well, that's it. I hope everybody appreciated it. I'm going to call it quits. And this is recorded, so you can always go back and look at the support levels and the pivot points and see if you got anything out of my lesson today. Just don't let your emotions get run in with these big runs. Always know that they're going to pull back, and always check the float on them. Always check the news. Then once they pull back, you know, they could be another. There's a reason why they run like they do. It's usually off of news, or it's being pumped by a bunch of low float pumpers. And then people get caught up and they get chasing in the trade. So don't do what I did last week with Fubo. Look at history of the stock and see how strong they are. And I do really appreciate you all showing up today, and appreciate you hitting that like button. And it'll be recorded, so you can always go back and find these support levels and resistance levels. And I wish everybody a great day. And I love stocks. And also on our website, you know, if you're not a member to the room, we have a Twitter page. If you have a Twitter page, you can always follow us on Twitter. It's in the link on the website. You can go straight to it, hit that follow button. We're gaining followers on a daily basis. Plus we have our stock twits. I'd appreciate it if I can get this up a little bit higher than what I have. I have 3,100 followers right now, probably more. I'm due for another number on there, 32 coming. I know it's coming. I feel it. I post alerts in here too of stocks that I'm really watching that I really like. Also, subscribe to that. I do videos. I've kind of cut back a couple of days here, but I do videos on, I'll do a watch list on the weekend, and then I'll do single videos on a stock that I'm watching during the weekday that I'm looking at. So keep an eye on that. But always hit that bell, ring that bell, so you get future updates. And I think that's about it. I really do appreciate it. And I'll see you all Tuesday. Remember, we got Monday off and Martin Luther King Day. And Tuesday is going to be a short week. So it's going to be probably a setup into the week next week. We got inaugural, or whatever you call that, when they're going to swear in Biden. So that's going to be kind of exciting. I don't think I'm going to watch it, but I might. Who knows? I hate politics. I hate politicians. So that's it. I love stocks. Now if I can find where I can shut this thing off. Have a great day.